Hello, I'm Andrew Keane from Edison Group. It's my pleasure today to welcome Klemens Eiter, a member of the management board and CFO of PORR Group, to discuss the company and its outlook. PORR is a construction company with businesses across Austria, Germany, Central and Eastern Europe. So welcome to talk to us today.
Hello.
Let's start with discussing what is PORR? What is the group? How would you describe it overall?
PORR is a construction group with almost 7 billion euros of output and more than 20,000 employees, a leading construction group in Europe. Our USP is to serve as a one-stop shop, offering planning and design, construction, renovation, but also recycling and demolition, and so serving the whole life cycle of construction projects.
And where are you most active? What are your principal geographies?
Well, we have a strong geographical focus on our what we call home markets, where we offer our broad service line. This is the DACH region and Central and Eastern Europe, namely Poland, Romania, Czech Republic, and Slovakia.
And what kind of sectors are you most active in? What kind of construction sectors?
Well, our USP is to have really a big value chain. Either it's infrastructure or building construction. So we do almost any kind of infrastructure like road construction, railway, where we have a special system and patent called SlabTrack, which we also use in the UK, for example, for high-speed 2, tunneling, but also energy transition, doing power plants, doing cables, pipelines, also LNG terminals. So a broad line of infrastructure, but also with special products on building construction, like hospitals, data centers, industrial constructions for big industrial clients. So we pretty much serve the whole construction value chain.
Construction's a cyclical business. How would you describe the current market?
Well, I think that most of the big trends need the support of the construction industry. If you think of digitalization, for example, and all growth in artificial intelligence or cloud computing, you need data resources, data capacities, and therefore you need data centers. The growth of data center construction expected in Europe is from about 30 billion euros a year to more than 70 billion in 2030. Aging of society, demographic change needs really big investments in healthcare, in hospitals. Or like nearshoring, you need really investments also in industrial construction there. Also housing, affordable housing, I think that's an issue, also a political issue in all our markets there. So I think there are really big investments needed using the construction industry, and especially our markets are prepared for that. Germany just issued a big program for infrastructure with more than 500 billion euro. But our core markets, especially Poland and Romania, it's not so much seen due to the big German program, but growth is really taking place there. So Poland announced a program for a railway of almost 50 billion up to 29 and more than 30 billion in airport infrastructure. And Romania is highly investing in their highway network based on European funds. They're holding now at 1,000 kilometers of highway and heading for more than 2,000. So growth is pretty much also taking place in these eastern countries now.
What's the competitive landscape like in your various markets?
Well, in general, we have to say that competition is high in the construction industry, leading to lower margins compared to other businesses. Therefore, it's important to have a good market position. That's what PORR was focusing on the last year to build the market position. We are the absolute number one in Austria, which is still, this is our home country, our oldest home country, still with almost a share of output of 50%. So that's really important. But we've been developing a top 3 market position in Poland, in Romania. And the good thing is that our competitors, our strong competitors in Europe, like the French companies or like Hochtief, they are not that active there. So that's actually our USP, to be now in the position for benefiting of the growth and infra investments in these countries in Eastern Europe.
They're pretty nice market positions. How did PORR get to where it is today?
Well, actually, up to 2010, the core shareholder of PORR was a bank, and there was no real operating interest or interest in developing a really big construction company. In 2010, Karl-Heinz Strauss entered the company as a CEO, but also as a major shareholder. And he started to build the competencies, as I said before, in tunneling, in railways, slab track, or in industrial construction with so-called clean rooms that only few construction companies can really do. And with a focus on the core markets to develop. So it took him something like 10 to 15 years to build a European player. But I think, that's really a nice story. And I think we're there now. We got the market positions and we got opportunities and good outlook for further growth now.
And construction's a cyclical business, and we all know in the pandemic it was quite poor. But also in 2019, your margins were a bit compressed. Can you talk us through that cycle and why you think that was a one-off?
Yes. Well, most of the journey was pretty well to build the European player. Actually, Germany is the biggest construction market in our area. And at that time, some engineers from a competitor were changing to PORR, promising fast and big growth at the biggest market. Also promising to bring the staff, the employees there necessary for that big growth. Well, actually, that was a little bit too fast. Yep. And we did not have the necessary employee resources to realize that. So how did we react on that? Actually, we introduced new rules. First, new risk evaluation rules. When we take on a contract, there is a list of critical factors, including, of course, having the right personnel from first day on, doing and serving for the contract, and defining red lines of risk where we should not or do not enter into a contract. Then also new rules about decision. All big contracts above 100 million euro need the approval of the whole group board. So that's also a risk limiting factor. And in the end, also during execution, a lot of things can happen. And to really bring that out very quick and answer very quick, we introduced new risk management rules where all bigger contracts are monitored on a continuous basis.
So on margins, how have margins been recently and what's your expectation in the near future?
Well, based on our new measures for risk especially, we've been able to improve our margins from 21 to 24, from 1.8 to 2.6. So if you look at the bottom line, this means an improvement of 70%. For 25, we're heading for 2.8 to 3%. And we newly issued our midterm goals of 3.5 to 4%. So I would say in our development, we are halfway. As I explained before, we have opportunities in our markets. infra markets, Eastern Europe and Germany, but in building construction, in the niches, especially margin opportunities in data centers, hospitals, and so on, where margins are actually most time much better than in usual construction contracts. And also room for improvement with our overhead cost, as in general, we were able to manage the cost increases on our contract side. But for overheads, about 15 to 20% salaries increase in 2 years were too much, giving us potential for more efficiency and decrease of overhead costs the next year. So in total, we are pretty confident to develop our margin up to 3.5 to 4%, which would be same increase as we've seen the last year.
Stock performance has been really strong of late. What kind of questions are you getting from investors?
Well, actually, I think it took some time that the market realized that we're really performing and developing. By the end of 24, this was really taking up. Actually, it was the fourth year in a row that we really strongly delivered. And based also on the mega trends and the outlook in construction, increase was about more than 100% from then on. But if you take our results and development of results, net income also increased by 100% compared to 21. So it's in accordance with our economical development. Good thing is that also liquidity on the market was taking on. And I think we're on a good way to find new investors now, also because our market cap has increased. We're above 1 billion now. And actually with the new liquidity, also going towards ATX, which is the prime index in Austria. And I think if we can reach that, that would be next level and opening up even more chances for investors to come in.
Klemens, thank you very much for joining us today. If any investors have any questions, please refer to the Edison website in the first instance. Thank you.